All right, today we are going to unpack the incredible turnaround story of a high-tech company called Xaar. Their latest earnings report tells a fascinating story of survival, innovation, and a really high-stakes bet on the future.
So this is really the core question they had to answer. I mean, just imagine for a second, what if your main source of income just vanished overnight? That was the reality for this company, and it was a true test of their will to survive, for sure.
And you know what? Their survival hinged on a pretty radical new strategy, using their unique technology to do what seemed impossible. So the big question is, do their latest results prove that this high-stakes pivot is actually working? Well, let's find out. Okay, so at first glance, the headline numbers from their latest report tell a very, very positive story. The real standout here is the core printhead division. This is the heart of their business, right? And it posted an impressive 22% revenue growth. For a company in a turnaround, that is a huge signal of health and momentum.
And here we have the CEO, John Mills, confirming it. He's emphasizing that this specific targeted growth in their core tech is what's fueling the entire group's recovery. So this isn't just random growth, it's very strategic.
Now, to really get why that 22% is such a big deal, we need to understand the massive challenge Xaar was up against. So let's take a quick look back at their recent past.
You see, for years, Xaar absolutely dominated the market for printing designs onto ceramic tiles. But being so heavily reliant on just one market, well, that created a huge vulnerability.
So when the Chinese construction market slowed way down, demand for new tile printing machines just evaporated. Then, a flood of second-hand equipment hit the market, and just like that, Xaar's main revenue stream completely collapsed.
The CFO, Paul James, describes this as a persistent headwind that held the company back for years. Overcoming this wasn't going to be a quick fix. It was going to require a complete reinvention. So how did they fight back? Well, instead of just looking for another big market like ceramics, they decided to lean into their unique technological advantage, what you might call their secret sauce.
And here it is, the core of their competitive edge. Xaar's printheads can handle these really thick, high-viscosity fluids that others just can't. And that one capability opens up a whole new world of industrial applications that were totally out of reach for inkjet technology before.
And this advantage is seriously well protected. We're talking a combination of over 147 patents, decades of manufacturing know-how, and deep expertise in how to apply it. This all creates a powerful defensible moat around their business.
So let's see how their new strategy builds on this unique technology. You know, after getting burned so badly by relying on one market, the new plan is all about one thing: resilience.
The strategy is crystal clear. Target 21 different markets. This creates a broad, diversified base, making sure that a downturn in any single one of them won't cripple the company ever again. It's diversification by design.
Now, to get into these new markets efficiently, they use this really clever halo account strategy. First, they partner up really closely with one key customer. Then, they make sure that partner is super successful. And once that happens, it creates a halo effect. All of their competitors see that success and want the same technology. This just slashes the sales cycle, from years down to months for the next customers. It's pretty smart.
And look, this isn't just a theory. It's a real, tangible pipeline. Printing wax models for jewelry, that's already commercialized. Applications for EV batteries have launched. And a new desktop 3D printer is about to hit the market. The strategy is actually delivering real-world products. But of course, the path to a full turnaround is rarely a straight line. So for the complete picture, we also have to look at the challenges, which, to their credit, the report is very open about. So on one hand, you've got this great news, that 22% growth and improving margins. But that's balanced by some real headwinds. Their net cash has fallen, inventory levels are still pretty high, and the US business actually saw a decline. It's kind of that classic 2 steps forward, 1 step back situation. The good news is management is actively on this. They're tackling the cash and inventory problems with a new focus on something called stock turn, which is basically a measure of how quickly they sell their inventory. The goal here is to make their working capital way more efficient and improve that all-important cash flow.
So, what's the big takeaway from all of this? What does it all mean?
Well, CEO John Mills really nails it here. He basically says the bet on Xaar isn't on one single magic application. Nope, it's a bet on the power of the entire portfolio. It's the combined strength of all those applications that's going to define the company's future.
And this really leaves us with a fascinating final question, doesn't it?
Can a diverse portfolio of niche applications actually create a more resilient and profitable company than dominating a single large market ever could? Well, Xaar is betting their future on it, and based on these results, it seems that bet is starting to pay off. Thanks for joining us.